You know that feeling, right? It's Sunday night, maybe 8 o'clock p.m. You're trying to watch a movie, relax, maybe have a glass of wine. But there's this knot right in the pit of your stomach because you know exactly what's waiting for you at 9 o'clock a.m. on Monday.
The Sunday scaries. But what we're seeing now, especially looking ahead to the landscape of 2026, isn't just the scaries. It's something deeper. It's an existential crisis wrapped in a blazer and khakis. We're talking about the corporate refugee.
That term always fascinates me. A refugee. It implies you aren't just leaving a job because you found a better dental plan. You're fleeing, you're escaping a hostile environment.
Exactly. And that's the premise of this survival guide we're looking at today. It's for the people who look at their career trajectory in a massive conglomerate and realize the ladder isn't just leaning against the wrong wall, it's leaning against a burning building. But here's the kicker. Usually, when people want to escape, the number one thing stopping them is capital. They say, I'd love to buy a business, I'd love to be my own boss, but I'm cash poor.
Right. I have a mortgage, I have kids, I can't just start a lemonade stand.
But they aren't actually poor. That's the irony. They're sitting on a mountain of capital. It's just locked away in a fortress called a 401k.
Okay, now we're getting into the dangerous territory because we've been trained, brainwashed really, since our first paycheck. You do not touch the nest egg. You put money in, you forget it exists until you're 65 and ready to play golf. Touching it early means penalties, taxes, financial ruin.
That's the traditional script. And for a long time, it was good advice. But the strategy we're dissecting today turns that on its head. It's about a mechanism called ROBS. Rollovers as business startups. It's not a loophole, it's a specific IRS sanctioned pathway. And it's the secret weapon for the corporate refugee in 2026.
So, walk me through this. Because if I tell my accountant I'm cashing out my retirement to buy a business, he's going to have a heart attack.
And he should if you just cash out. If you withdraw the money, you get hit with income tax and a 10% penalty. You lose 40% of your buying power instantly. That's suicide. ROBS is different. You aren't withdrawing the money, you are rolling it over. Just like you would if you switched jobs from one corporate giant to another. But instead of buying shares in Apple or Microsoft, your 401k buys shares in You Inc.
So the retirement plan becomes the shareholder of the new business I'm buying?
Precisely. You incorporate a new C corporation. That corporation starts a 401k plan. You roll your existing funds into that new plan. Then the plan buys stock in the corporation. The corporation is now flush with cash, tax-free, penalty-free, and you use that cash to buy a business. Specifically, in this context, we're talking about buying an existing cash-flowing business in a place like Canton, Ohio.
Why Canton? I mean, nothing against Ohio, but when people dream of entrepreneurship, they usually picture a tech startup in Austin or a coffee shop in Seattle. Why is the survival guide pointing us toward the Rust Belt in 2026?
Because you don't want to buy a dream, you want to buy cash flow. This is the mistake so many first-time entrepreneurs make. They chase sexy, they want the app, the trendy brand, but the corporate refugee doesn't need to be cool. They need to replace a six-figure corporate salary on day one. Places like Canton, Ohio are gold mines for what I call boring money.
Boring money.
HVAC companies, specialty manufacturing, logistics and trucking, commercial landscaping. These businesses in the Midwest often trade at lower multiples than on the coasts. In 2026, you have this massive wave of baby boomers, the silver tsunami, who are desperate to retire. They've built these solid, unsexy businesses in Canton over the last 30 years. They don't have kids who want to take over. They just want to sell and go to Florida.
So you have a motivated seller class and a buyer class, these corporate refugees who are desperate for autonomy. It's a perfect storm.
It is. And think about the math. If you have $300,000 in a 401k in the stock market, that might grow 7% or 8% a year if you're lucky and the market doesn't crash. If you use that as a down payment or even the full purchase price for a business in Canton, you're not looking for 8% returns. You're looking at buying a job that pays you a CEO salary plus the profit of the business. The return on investment, strictly financially, can be massive. But the real return is psychological.
That's the refugee part again. It's about control.
It is. When you're in corporate, your 401k is betting on other people's performance. You're betting on the CEO of Amazon. You're betting on the global economy. When you do a ROBS transaction to buy a local business, you are taking those chips off the table and betting on yourself. You're saying, I trust my ability to run this plumbing supply company more than I trust the stock market in 2026.
That's a heavy psychological shift, though. I mean, betting on yourself sounds inspiring on a bumper sticker. In reality, it's terrifying. If the business fails, you haven't just lost your job, you've lost your retirement.
It is terrifying. I won't sugarcoat that. But let's look at the alternative. What is the risk of staying? We're seeing AI integration, massive corporate restructuring, outsourcing. The idea that a corporate job is safe is a relic of the 20th century. The corporate refugee realizes that the perceived safety of the cubicle is an illusion.
So the risk profile has flipped. The risky move is actually staying put and hoping you don't get downsized.
Exactly. And when you look at a market like Canton, you're mitigating that risk. You aren't starting from scratch. You aren't guessing if people need the product. You're buying a company that has been profitable since 1995. You have customers, employees, processes. You're stepping into a moving vehicle. You just need to keep driving it, maybe upgrade the navigation system.
Let's go back to the mechanics for a second. We're talking about 2026. Are there specific trends making this trade of the 401k more viable or necessary right now?
Interest rates are a big factor. Even if rates stabilize, borrowing money from a bank is expensive and difficult. Banks are tightening up. If you go to a bank for an SBA loan, they want collateral. They want your house. When you use your 401k via ROBS, that's an equity injection. It's your money. You don't have a monthly loan payment to yourself. That improves the cash flow of the business immediately. In an economy where cash is king, starting debt-free or with significantly less debt is a massive competitive advantage.
That's a great point. If you take out $1 million loan to buy a business, that debt service eats up your first few years of profit.
Right. And that pressure kills businesses. If you have a bad quarter and you owe the bank 10 grand a month, you're in trouble. If you have a bad quarter and you are the bank, you weather the storm.
I want to touch on the lifestyle aspect. The article mentions this survival guide concept. Moving from a corporate structure to running a small business in Canton, that's a culture shock. You go from having an HR department and an IT guy to being the HR department and the IT guy.
Oh, it's a shock. You're trading a boss for customers. You're trading office politics for payroll issues. It's not a vacation. But ask anyone who has successfully made the jump, ask them if they'd go back.
And
Almost universally, the answer is no, because the stress is different. Corporate stress is helpless stress. It's waiting for the memo. It's dealing with red tape you didn't create. Business owner stress is active stress. It's this machine broke, how do I fix it? It's problem solving. It's exhausting, yes, but it's not soul crushing in the same way.
And there's something about the community aspect too. Owning a business in a place like Canton implies you're part of the local fabric. You aren't just a number in a global payroll database.
That's the survival part of the guide. Survival isn't just financial, it's social. In a corporate gig, you can feel incredibly isolated even when surrounded by people. In a local business ecosystem, you matter. You sponsor the Little League team. You know the other business owners. There is a tangible connection between your effort and the community's well-being. That feeds the soul in a way a quarterly earnings call never will.
It sounds like we're advocating for a return to something older, like before the era of the mega corporation. This was just how business worked. You saved money, you bought a shop, you ran it.
We are. It's a modern mechanism, the ROBS transaction, facilitating an old school way of life. It's using the tools of modern finance to escape modern finance.
I love that. Using the tools of modern finance to escape modern finance. But let's play devil's advocate one last time. What goes wrong? A listener is hearing this, looking at their 401k balance and thinking, I'm doing it. What's the pitfall?
The biggest pitfall is the mismatch. You buy a business you don't understand, or you buy a business that owns you. You have to do the due diligence. Just because a business is in Canton and has a for sale sign doesn't mean it's a winner. You need to look at the books. You need to understand why the owner is selling, and you need to be honest with yourself about your skills. If you've been a marketing VP for 20 years, maybe don't buy a precision machining plant unless you have a partner who knows the technical side.
So the survival guide isn't just buy anything, it's buy smart.
Exactly. And don't underestimate the transition period. The first year involves cleaning up the previous owner's mess, establishing your culture, and figuring out how to pay yourself. It's messy. But the reward at the end, trading that 401k balance, which is just a number on a screen, for a living, breathing asset that generates cash and freedom, that is the trade of the decade.
It forces us to redefine what wealth is. Is wealth a number in a retirement account that you can't touch? Or is wealth the ability to wake up on a Monday morning without that knot in your stomach?
That's the ultimate question. In 2026, I think more and more people are realizing that time and autonomy are the only currencies that actually matter. The 401k is just the fuel to buy them back.
It's a compelling argument. It's scary. It's bold, but it makes a lot of sense for the right person.
It's not for everyone. If you love the safety of the herd, stay in the cubicle. But if you feel like a refugee, if you feel like you're just surviving until the weekend, maybe it's time to look at that 401k differently. Not as a retirement plan, but as an escape hatch.
An escape hatch to Canton. Who would have thought?
Sometimes the best opportunities are in the places everyone else overlooked.
Well, that gives us plenty to think about. For everyone listening, take a look at your statement this month. Don't just look at the total. Ask yourself, is this money working for me or am I working for it?
And if you don't like the answer, you know where to look.
Thanks for diving deep with us today. Until next time, keep thinking and maybe start planning your escape.